Thank you very much, and thank you for inviting me. I mean, it's a bit pretentious to say that I would advise anyone, to be honest, because financial crises are obviously different in different countries and different times as well. But to start off, I think that the best way to handle banking crises is to try to avoid them. Obviously, macroeconomic policy plays a part in whether you have a bubble and you have a crisis in the financial sector. So macroeconomic stability, low inflation, prudent fiscal policy, good monetary policy, good regulation, of course, that plays a role. On the other hand, I'm quite convinced that market economy per se, being superior to any other economic systems, according to my view at least, still has a built-in tendency of having crises now and then. Since market economy builds on individual people's, entrepreneurs and others' feelings, sometimes you get some euphoria feeling, which means that you have a bubble of one kind or another. And that probably means that someone borrowed money to, like the IT bubble and others. You're not quite sure whether this is the breakthrough, this is something, and you want to be there, and you take a risk, and the risk is too big, and then you have the crisis. So I think that we are going to live with crisis in the future, which means that I do hope that politicians that today talk about future regulation also think about future crisis management. In Sweden, we had a crisis. The legislation we had was abolished in 1996, and we had no legislation whatsoever until we had the crisis again last autumn. Then we reintroduced the old legislation. I think that you need to prepare also for crisis, not only to regulate in order to try to avoid crisis in the future. There are many differences between the Swedish crisis and what's happening in the world now. There are perhaps more similarities between Ireland and Sweden, coming back to that. But the main difference between what we had to handle in the beginning of the 90s and what Ireland has to handle today is obviously the size of the crisis. And that is, of course, comparing to the global situation, also a problem. I mean, we are a small country, 9 million people. We had a financial sector that was 120% of GDP at that time. It's twice that today, with the banks expanding even in Sweden. But obviously, that makes it much more easier than if you have a global problem with countries like the US being the epicenter of what's then added on in some instances by local domestic problems as well. So size is one problem. Complexity is, of course, another one, especially if we compare with the US and to some extent other countries as well that have been exposed to this innovation power that you find in the financial sector. Everyone understood that the US sooner or later would have losses from the subprime loans. Everyone understood that. But everyone also, I think, believed that they could be handled quite easily because nobody understood the way securitization had expanded with all these new instruments and in different layers and levels as well. So, of course, complexity is difficult, even if there are similarities between Ireland and Sweden, since we both obviously have most plain vanilla loans with one borrower, one collateral, and then a bank who lent the money. We had a regional crisis. It was only Sweden and to some extent Norway and also Finland. Otherwise, even if we had currency turbulence in 1992 in the European context, still it was mainly a regional conflict. That made it easier. And the turnaround was easier for us as well, since we had a peg to the European currency unit at that time, but we had to let that peg go. One reason being that we had a cost problem, but we also got a devaluation in real terms, which helped us, of course, when the global economy recovered as well. So these are the differences, and it's very vital to, of course, note these differences. On the other hand, there are challenges that every government needs to meet when you have a huge crisis or a systemic crisis in the financial sector. Regardless of size, regardless of complexity and so on, you still have to meet three, as I see it, challenges. One is to maintain liquidity. And that's a task mainly for central banks, to see to it that the financial system has the liquidity needed And I think that central banks today have managed that quite well. It goes for central banks all over the world. The two tasks that government has to accomplish in order to avoid, that's the objective for governments, to avoid the credit crunch that you get when you have losses in banks and financial institutions, which means that the base for lending shrinks. And the fear of getting more losses makes lending more difficult. You want to be more cautious. This, of course, constitutes the risk for a credit crunch, which affects the real economy, which is probably hurt even in the first place when you have this kind of crisis. So you have to, in one way or another, unwind the situation in the financial sector, and by doing this, you need intervention by governments. It's not possible to manage it without that kind of handling. And what governments need to do is, first, they have to restore confidence. I mean, when confidence is lost, you can see what's happened. We had a situation in Sweden in 1992, and that was exactly the situation that the world, US and the world, experienced after Lehman's in September last year. Then suddenly there is no confidence. Everyone thought, okay, the government is probably going to handle the situation. There is an implicit guarantee for creditors to the banks and to the financial institutions. And suddenly institutions understood there was no guarantee. You could lose money, then confidence is lost. So restoring this confidence in order to be able to fund the sector and in order to be able to let managements in banks feel secure enough to be able to continue lending. That's a necessity to try to meet that challenge. And thirdly, governments need to see to it that capital base for lending is restored. If you have had excess lending, of course, you might not need to go back to exactly where you were before the crisis. But in Sweden's case now, for instance, we have a lot of huge international corporations that have financed themselves in the international capital markets. Financing is difficult to get by today, and they have been financed by international banks. So we feel the need to expand our capital base for lending to take some of what was financed on the capital markets internationally beforehand. So the exact definition of how much capital base you need is difficult to say, but you need to get the capital base needed to have the lending capacity needed for the economy. Households, small businesses, bigger businesses, and so on. That's also a necessity. And in a crisis, it might be difficult to get private investors to go in as owners, as providers of this capital for banks. And then there is no alternative, as I see it, than the government to go into banks and furnish that, to get that capital into the banks. So these are the challenges I see that you need to meet. Maintain liquidity, restore confidence, and restore the capital base. Now I'll try to give a picture of the Swedish situation in the 90s. Try to comment a bit on the US handling of the crisis and to some extent the European handling of the crisis as well. And then open up for question and answers. What caused the Swedish crisis was too late deregulation of the credit markets. We had regulated credit markets from the Second World War coming up to 1985. And then everyone understood that these were obsolete. You had to get rid of them. And, for instance, we had ceilings for how much banks could lend next year and so on, decided by the central bank. And obviously, when you do deregulate, things that you don't expect do happen. One, of course, was obvious. Banks were not used to have this deregulated environment. But the government and central bank also deregulated in a highly inflationary environment, an overheated environment. And if you have high inflation and tax rates on capital income, which means that deductions for interest paid are rather high, then obviously it's a good thing to try to borrow money and invest in real estate, with a lot of people and institutions did in Sweden. So we had a bubble, an ordinary real estate bubble that was blown up until 89, 90, when suddenly, as all bubbles, this bubble burst. We also had an overheating regarding the household sector, residential as well. But that was mainly that prices of housing rose rather rapidly, and people started borrowing to get new kitchens, new cars, new boats, whatever. And these people didn't cause problems for the banks in a way, not much, because people wanted to keep their homes, so they instead started repaying the loans of the 80s, and thus consumption got down and domestic demand shrank, which gave us a huge fall in GDP for 3 consecutive years. It didn't give any direct effect for the banks, like in the US today, where you can leave your house. The system is there a bit problematic. Through the banks, you have this problem in the US today. So commercial real estate gave us this bubble. It burst around 1990. At first, everyone saw that this was a problem for the grey market that has been allowed after the credit deregulation. We had so-called finance corporations, one called the Key, Nyckeln, very active in Britain, that lost a lot of money, and they went into bankruptcy in September 1990. But everybody believed that this was something outside of the banking sector. The banking sector was sound. Then some problems emerged in the to 77% government-owned Nordbanken, today Nordea Bank. And these problems that emerged was seen as a bad management on the account of a government entity. Obviously, government isn't, I believe, so as well. Government is normally not very good owners of any institutions, I would say, business institutions, like corporations, like banks, whatever. So everyone believed, okay, this is a problem with government entity. It's not a bank sector problem. We won the election, the coalition I served in October 91 and took office in the beginning of October. 2 days after taking office, we had the biggest savings bank with problems. The problems were very grave. They had no equity left, so there was no capital base at all. And we, of course, found that this bank was too big to fail. They had a lot of funding, international funding, short-term, which was then transformed into long-term real estate funding in Sweden. It gave some problems to handle the situation. So we guaranteed this bank, and we started seeing how Nordbanken got more and more credit losses, and we understood that this was going to be a systemic crisis because every other bank also had some problems, and we could see that growing over 1991 and the beginning of 92. After this case-by-case handling, we tried to study other cases, how they did to manage their situation in savings and loans crisis in the US. We started looking at the banking crisis of 32, 33, also in the United States, to see how did they manage, or what's wrong, what mistakes did they make. We also did some changes to the regulation in order to have a more transparent view on what was happening in the bank sector. So we instituted tougher rules on how to value non-performing loans with mark-to-market valuation of assets and so forth in the banks. We abolished commercial property tax on commercial real estate in order to stop prices falling. We could see the prices, especially in Stockholm, Gothenburg, and that kind of areas falling quite rapidly. So that was another thing that we tried to do. And we started preparing for what we thought would come, some kind of total or rather big loss of confidence in the economy. And that came in September 92 when we had a bankruptcy, one of the medium-sized private banks, and we also had the currency turbulence and some other problems domestically in Swedish economy. And we could see overnight almost that spreads widened immensely, that we had markets didn't work at all. We needed to do something about it. And what we had prepared at that time was a comprehensive package to try to deal with the situation. One thing that was a necessity for us was to try to get some kind of political consensus. Since we were a four-party minority government, I wouldn't recommend that kind of government, to be honest, because we needed the passive support of not voting against us from one populist party, and a populist party on the right side could the next day be on the left side, as populist parties do. So we couldn't rely on that. So we had contacts during the case-by-case handling beforehand with the Social Democratic Party, and we had discussed with them during the spring as well, and they were ready to form a kind of coalition with us in order to handle this situation. So this package was supported by the opposition, the main opposition party, already when it was just a press release presented on September 24th, 1992. But it still, since it had a huge majority in Parliament, worked anyway, until the decision was taken 2 months later in Parliament. The package consisted, first of all, of a blanket guarantee for all creditors and depositors, not for shareholders and not for perpetuals. But, of course, I know that there's a debate. I saw an article in Irish Times the other day of a Professor Kelly arguing that first of all, Sweden didn't have banks that were mainly financed by deposits. That's not true. They were financed and funded by both bonds, and they were financed by foreign funding as well, direct interbank funding as well. So we had that funding problem in the Swedish situation. We also had. There also is a discussion in this article about whether bondholders should be guaranteed or not, because they do get paid by interest and should take risk and should do analysis. I agree on that. On the other hand, you saw with Lehman collapsing what happens when bondholders are not guaranteed. I mean, if you want to restore confidence, you want to have financing done in the future, funding for the banks, then obviously the guarantee should cover both bondholders and depositors, all creditors. There is a slight moral hazard problem. Investors should take a risk. Investors should make analysis on what investment they are making. On the other hand, compare that with the risk for the real economy if you can't handle the situation and restore confidence. So that's what you have to weigh against each other. So we did the blanket guarantee, and we also said, because that's not enough, the guarantee gives confidence back, and you can have funding, liquidity was possible from the central bank, even to insolvent institutions, since they were guaranteed by us. So we took care of that problem. But you need to restore capital base, you need to handle the problems within the banks. We already had 2 banks with problems. That was Gota Bank, which was going bankrupt just before this loss of confidence, and we had the government-owned Nordbanken. So what we did with Nordbanken was to make it fully nationalized to be easier to handle. Of course, Gota wasn't worth anything. We had to nationalize that bank. These were the only 2 of 7 major and medium-sized banks that we nationalized. I did believe that also 2 or 3 other banks would have to be nationalized in the worst moments of the beginning of 1993, before we had a turnaround. But what we did was to ask Parliament for authority to go into banks and to liquidate in an orderly fashion those that were not survivable, and to reconstruct others by equity, by guarantees, or whatever means that we could think of. What we also decided was that the economic frame for these measures should be unlimited for government, because it was difficult to make a calculation of how much did we need to put into the sector in capital injections or whatever we had to do. And if we had to go back to Parliament another time to ask for more, then the crisis would once again live again, and we'd had more confidence problems. So we decided on an unlimited frame, not too big, not too small. That helped us in a way. We used some of the experiences from the 1932-33 banking crisis, not the one that restored confidence or was aimed at restoring confidence, and that was, which they did at that time, closing all banks for a week and then reopening the ones that were after analysis found solvent again. They did, I think, one in each of the Federal Reserve districts first, and then they continued further on. That, of course, was giving back confidence. Everyone understood that these banks were solvent and you could put money in them. On the other hand, it's a hard way, and it wouldn't be recommended to do it nowadays anyway. But what we found out was that they also had a way of categorizing and handling these banks in A, B, and C categories, and we used that directly in a way. By saying this, I'd like to show that there are experiences from other crises that you can really use, even if it's old experiences. So we used them to categorize the banks that applied for support. So now, after this package, we had 2 nationalized banks, that we had to deal with. We had 4 other banks that applied for support, and only one of the 7 major and medium-sized stayed out, didn't apply for support. Those that applied for support had to open up themselves for our analysis. We were to decide what kind of support they needed and to what amount. They couldn't ask for an amount. We did the analysis, we made a suggestion. We found out that we had a kind of moral hazard problem, and that was when we wanted to have the shares of this bust Gotha Bank, the medium-sized that went bankrupt just before the loss of confidence. Those shares were collateral for a loan from one of the other banks to the holding company that owned Gotha Bank. And since the bank wasn't worth anything, obviously, as far as I see it anyway, they thought the shares were worth anything because we wanted them as quickly as possible. And time is also valuable, which meant that they asked for a couple of 100 million Swedish kronor to give us the shares, which I, of course, couldn't pay. That gave us the idea that we should try to hinder more problems in dealing with the private banks that had applied for support. So we introduced rather fast legislation that gave us the right to make a proposal to a bank or to decide that the bank needed support. And if the bank wouldn't accept that, we could go to a special court with 3 judges that could decide that we were right to do what we did. And they could also decide when capital adequacy ratio fell under 2% that we could take the bank. Of course, we had to compensate the shareholders if there were any value without government support, like Northern Rock in Britain. So this legislation gave us a better negotiation situation with the banks, you could say. And it helped also when the economy started to recover. It helped the private banks to find private solutions. So SEB and Swedbank and, for that matter, a farmers' bank that applied for support managed without our putting any more money into the banks, and they repaid our cost for the consultants and whatever cost we otherwise had for going into these banks. But we still had the 2 nationalized banks to handle. One was Gotha Bank, just a black hole. We got the shares for nothing, but we had an arbitrary board to decide whether there was any value, but there was no value, which we knew beforehand. But what we did then was to find out how do we handle the banks. Should we liquidate both government-owned Nordbanken and Gotha Bank? But for the structure and the competitive situation in the bank sector, we decided to keep Nordbanken. We decided to divide it into one good and one bad bank, and we did the same with Gotha Bank. So we had 2 bad banks fully owned by government and 2 banks fully owned by government. We didn't form any bad bank, we didn't buy any assets from any of the private banks. One reason being the valuation problem. The other being that if you buy assets, probably you have a hole in the balance sheet anyhow and you need to do capital injections. So if we had to do anything regarding the private banks that applied for support, we would have mainly done capital injections and done that with full voting rights. So we would take the responsibility as an owner if we also had to go in with capital in the bank. And that was, of course, threatening to the owners, the present owners at that time, so they preferred, when they could get it, the private solution. For Nordbanken and Gotha, we made the bad banks, as I said. Since we owned both the good and bad banks, we could value as good as we can, but if we made any mistake on valuation, that was not much of a problem, since we owned both entities. We kept some bad loans in order to promote some competition with the good Nordbanken, and then we gave the assignment to the separate bad bank to try to recover as much as possible of the bad loans we put into that bank. It was not the real bank, it was just holding these assets, the bad loans that we transferred there. We capitalized the bank in order to have a 0 result after 10 to 15 years, we believed. They managed much quicker than that. They did it in 5 years, and they got back approximately half of what we had original outlay, coming back to the figures later on. So we were now in a situation where Gotha Bank was almost liquidated. The viable and survivable parts of that was merged into Nordbanken, which became Nordea. We kept their bad bank for a while, and they made also the same kind of business like Securum. It was mainly in the bad bank's real estate 80% was real estate, mainly commercial real estate. They worked hard when it comes to the business parts there to try to revive them, try to increase profitability, and then try to sell after having worked as a holding corporation for a while. When it comes to real estate, they formed 5 companies. They were 5 public offerings, 1 in London. They handled that independently. I had 1 person on board, but it was people from the financial sector that was hired and did the work. Head of Securum, as the name was, is Lars Tunnell, who is today head of the IFC in Washington. So we managed to handle this. We had an outlay to capitalize Nordbank and Gotha and the bad banks, originally 4% of GDP, 65 billion in Swedish currency, but it's 4% of GDP. After 5 years, in 1997, the bad banks stopped operation and returned approximately half of that amount. So we were down to a cost of 2% of GDP, much less than from the original outlay as well than Ireland has today. Your problem is, as I said, much larger than ours was. We then got also dividends and increased value from Nordea, from the bank, which government still owns 19% of, but that's going to privatize when things turn around. Lessons you could learn besides that is that the valuation is, we were very conservative. We used mark-to-market valuation. We could do capitalization of cash flows as well as an alternative if there wasn't any market. We had a valuation board of experts that followed up on the valuation we did, both in our bad banks, but also when we did the analysis of the private banks to see how large the problem was in the respective bank. So there was a valuation board with experts. We were transparent also in another way. I made presentations to government, to Parliament regularly, to have a debate on what was happening. As I said, we had political consensus on how to operate the problems, and to give transparency and information to the opposition party, the Social Democrats. We formed a special bank support authority, worked under Ministry of Finance. We decided, but they prepared decisions. On the board of that authority, we had 2 members of the Social Democratic Party, which gave them possibility to follow what was happening here. That was a small price to pay for have this kind of political consensus as we needed. Finally, moral hazard. I believe that, as I said, you could guarantee all creditors. That's not a problem for moral hazard if you have a systemic crisis. But what you need to do is to make it costly for owners to mismanage bank and for managements to mismanage banks. That's the graver long-term moral hazard problem. So we, of course, changed boards and management in the banks we took over, and also in this savings bank we started out with. We did sue in civil proceedings. We did sue the boards of the 2 nationalized banks for compensation due to not following the internal rules for credits. And we also made an out-of-court settlement that was a bit of pain to them, economically speaking. So we did some things to let shareholders pay, to let boards and management understand their responsibilities, which hopefully have helped to some extent. Very, very briefly then, due to the time, and to have more questions and perhaps answers as well, you never know. Regarding this crisis, I was a bit astonished when after Lehman's, the US administration at that time was so passive in a way. I don't know if you remember the 3 pages of proposal that was put by Paulson to Congress, just asking for $700 billion to buy toxic assets. And there were no discussion on what happened if you buy toxic assets, which is a way of, I mean, you can help banks by doing that. But if you buy, you don't buy to nominal value. So if you buy with a haircut of 30%, for instance, then there's a hole in the balance sheet of 30%. Even if there were write-downs beforehand in the banks, you have a shrinking balance sheet. And if you need the capital base for lending, you have to do something about the capital as well. That led to rejection. And by the way, if you are going to have banking crisis, please have them after election, not just before elections, because it's easier. Ours was just after the election. So it was rejected by the American Congress. they came back and said, okay, both buying toxic asset and capital injection, and then it became only capital injections when they had approval from Congress. So to be honest, I think that the US administration at that time prolonged the crisis by not taking it straight forward and just handling it. Even if it was difficult to measure exact amount needed and so forth, you should have had better preparation since they understood what was going on. And of course, there was a mistake to let Lehman go. Lehman is the perfect example that you have to have, if you don't have an explicit guarantee, you must have a trustworthy implicit guarantee for creditors in the banking system, if you have this problem, of course. When the new administration took office, I was also disappointed because I thought they had prepared before the inauguration for a package that could come right away in the end of January or beginning of February. But even that took time. And I did understand that one of the problems was that there were no leadership in the American Congress because the administration was afraid to go back to Congress to ask for more money or to ask for more instruments to use. That's one of the reasons behind this rather odd thing where government takes all the downside risk for investment from BlackRock and PIMCO and others if they are buying toxic assets, which, as far as I understand, nobody has started doing it yet. Then they did a stress test, and then they started talking about green shots, and there might be some green shots as well. You never know. But obviously, these stress tests were more of baseline scenarios. If what we believe will happen, then it will be 75 billion more that's needed in the banking sector for the big banks. There is a downside risk to that. But still, it gave some hope, and psychology is very important. And obviously, there is a kind of, not stable situation, but it's living through. But to some extent, I think that you still have a problem with the lending capacity in the US economy, and that might keep the green shots not growing that as fast as they could grow. The European countries have been working together in a way that I, as a former vice president of the EPP, didn't believe it was possible to do. But the European program has some obstacles. I do understand that Britain, of course, gets angry if Ireland has a blanket guarantee, almost blanket guarantee at least, because obviously it's good for people in Britain to put their money here and so forth, and Denmark has a bit better deposit insurance than we have. So you need to have some coordination. I still think that the guarantee here was necessary, by the way. But what the European Union has done is this guarantee and capital injections programs, and they are in a way good. They are somewhat complicated, bureaucratic, since we handle both of them in my debt office now. And the fees are, of course, too high. If you want borrowers to be able to borrow not too expensive, and then you put on a fee for 1 to 5 year borrowing or guarantees, that's 80 basis points in Sweden, 110 I think here, 120 perhaps, if you would use that system. I mean, that's too expensive, when you have a crisis and you want the economy to revive as soon as possible. There's also a problem with some of the big countries, at least, not willing to do the stress tests that I think they should do, very open and transparent and showing the different bank situation. I do understand in a way that Germany, before the election in September, are hesitant to do that, but as soon afterwards as possible, I think, would be appropriate in a way. Finally, I mean, what we did was the Swedish experience, nothing that can be used right away in any other country. We had a rather easy situation, as I said. In one way, the turnaround became quicker since we had the depreciation of the currency and the global economy picking up. But what you need to do besides maintaining liquidity is to restore confidence, and you have to handle the question of the capital base and try to define what capital base you need. And if the private sector cannot give that capital base, cannot restore the confidence without any measures taken by governments, then governments have to take these. That's the recipe as far as I can see. And as I said, I think that you'll have crises in the future as well, even if we have new regulation. Hopeful not too much regulation. By the way, regulating rating institutes makes it easier for investors to say, okay, since they are regulated, now we can trust them. Obviously, we couldn't trust them with the mezzanines and super senior debt beforehand, but now they are regulated. Now we can trust them. Regulation sometimes is not very good because, well, you can understand the message. So hopefully we have a regulation that works rather well, better regulation, not necessarily more regulation. But one thing is clear. 10 years from now, 15 years from now, we will look back and say it was a bad times, but we survived and the economy picked up again. Because if you look at all charts of GDP growth in market economies, you see all the crises. They are blips on the curve because market economy is superior. I'm quite convinced that both Sweden today, Latvia, Ireland, US will come out of this crisis. The question is how so soon you do it. Bold action by governments, and you do it quite soon. Thank you very much.